So, what is premium financing? It's a question we all get asked a lot, and trying to explain it to people, I think sometimes some outlets make it very complicated. And it is a complicated process, but it's really not that complicated. Just like anything else that we do in life as grown-ups, we buy a house, we buy cars, we buy things, and we use oftentimes a bank to finance that. Premium financing is no different than that. Premium financing is a way to use banks' money to pay premiums on a life insurance policy. Now, like a car or like a house, there's a process you have to go through. They look at your credit, they look at your ability to be able to repay the loan, and they look at your at the situation, at how much income you have and what other assets you have to make sure that you're a good candidate to borrow money. But premium financing, just like the car and your house, is a way to pay for premiums to buy life insurance. And we use the life insurance cash value as collateral, and we may have some outside collateral that is required depending on the strategy. But premium financing is nothing more than a way to use the bank's money to create leverage to buy a life insurance policy that you may need. So who is premium financing for? Premium financing is for the wealthy. It's for people that have money, but their money's maybe working for them in other capacities that is outperforming the cost of the loan. So people that are great candidates, doctors, professionals, attorneys, real estate agents. We do a lot with chiropractors. We do a lot with developers that they have the ability to pay the interest, but their money maybe is tied up in deals, or their money's tied up in other things, or expanding their business and tied up in different things. So the candidates are folks, again, that have net worth, that have a high income. This is not for your blue collar, rank and file, your average Joe. These are for your wealthier clients, your wealthier prospects. First and foremost, the insurance need has to be there. So once you've identified that insurance need, whether it be for estate planning, whether it be for business planning, whether it be for estate equalization, life insurance is a great way to solve those problems, and using the bank's money to help pay for part of it even makes that solution that much better. So let's talk about why people might borrow money to pay for life insurance. Lots of different situations, but as a couple of examples is maybe they need it for a business situation. They need it for a buy-sell. And the money right now in the business, the liquid aspect of their money and the net worth of the company is a little bit low. They're growing, they're hiring new people, they just built a building, they had to buy a fleet of trucks, whatever that may be. They're low on cash flow, but they do have a need for the insurance. The company's worth a lot, the value's growing, and if something happened to either one of the partners, it might create a train wreck. So they need the insurance, but they don't have the liquid ability to pay for it. Premium financing may make sense in that situation as a way to pay for that insurance need. Another one might be, take a rancher as an example, a farmer that they have a lot of land. They may even have some assets, some farm equipment and some animals and some grain in the ground they're waiting to harvest. They have a lot of net worth, but they don't have a lot of liquid cash. That is another prime opportunity and situation to look for premium financing as a solution to create some of the liquidity to help pay for the insurance policy that's needed, maybe for estate taxes, maybe for estate equity. But life insurance financed is a great way for those types of folks as well. So as an example, let's say you have right now real estate is really growing, and a lot of people are investing in real estate. And let's say we had the opportunity to buy a house as an investment property. We could buy that house and we fix it up and we rent it out. And we earn the money that's coming in on the rent. We may have to fix the roof, we may have to repaint, we need to replace the carpet that the dog chewed up. But ultimately the intent is for that property value to continue to grow. And we might even borrow money on that. And we can borrow money right now at a pretty low rate, even though interest rates are rising. But the accumulation on that property long-term versus the interest rate, the hope is that your house will grow in value greater than the cost of insurance, which historically is what's happened. Now we do have some downturns in the market, which usually it's a matter of time, and then you start going the other way. Just like borrowing money in that manner, we can do the same thing with premiums on borrowing the money to help pay premiums in our life insurance policy. And the way that works is the same leveraging thought process in that we can borrow money at a lower rate than we can earn money inside of the contract. So that spread, that leveraging, using other people's money is what makes premium financing work. Now I want to say a caveat to that is you have to have an insurance need and you have to have the ability to pay it. But what makes this a very attractive option for wealthy people, for that 1%ers, for the folks that have this, the ability to qualify for this, what makes it so attractive is you're using other people's money to help offset the cost of coming out of your own pocket. And what I mean by that is your money is making more money in other places. You could pay for it in this situation, the wealthy could pay for it, but their money's working for them in other places. So they'll use the bank's money at low interest rates to generate more money and even inside of the contract generate more money to offset it, so they're able to get more insurance or be able to pay less for the money. Again, assuming that they have the ability to pay for it and that they have the outside assets, it is a tremendous vehicle for using leverage, using other people's money to make to reach their objectives with regards to the death benefit. So if you are interested in learning more about premium financing, if you're an advisor and would like to learn more and offer this to more of your clients, or if you're somebody that thinks this may be right for you individually, personally, in your situation, for your family, for your estate, please reach out to the Alliance Group. We have a team of folks that are experienced. We've worked in this market for a long time. And again, I want to also make sure that you realize we have done this and we've seen a lot of different things, and we find that it's more important than anything else to make sure that it's the right plan for you and it's the right plan for your clients if you're an advisor. So we take that very seriously, and we're not afraid to say, yes, this is a tremendous opportunity for you, or no, maybe here's another option that might work better. So if you'd like some more information, please reach out to us directly or alliancegrouplife.com. Lots of great training, lots of great information, and other information as well that can help you in your planning and your planning needs. We look forward to hearing from you.